This is Bergamot with S&P 500 price movement analysis for the week of August 22nd, 2016, based on my proprietary CSI Composite Score Indicator. In a previous video, I discussed the ongoing trend, which started on the week of June 27 on Brexit, and it proceeded up until last week when it gave -7 -7 big change down signal right here, this one, this week. So according to rules of CSI, what you do is you wait for signal week, you buy above the week's high, then you wait for signal down week and you sell below the week's low. Stop at 216.20 on SPY, S&P 500 ETF, which gives about 2.5% on the SPY, or more if you use leveraged ETFs like SSO or UPRO. Your mileage may vary. It gives 2.5% of absolutely risk-free trade. If this week or the following week will trade below this level, the position opened according to CSI weekly indicator will have to be closed. Now, I said before that I have an open position in SSO, double leveraged S&P 500 ETF, and I will not be selling it even if this low gets triggered, because of several reasons. One of the reasons is over the past year or two, a lot of these lows of the warning signals has been cut by as much as 1 or 2 points. So it could be 10 or 20 points on the S&P full-size index, which is, you can feel it. If this low gets cut by a point or a little more, then we'll go to this low. And if that gets cut by a couple of points, then we'll go to 210 level. Now, if we look more in detail, there has been a box over the spring and beginning of summer, and the bottom of this box was broken on Brexit, right here. Following that, well, there was a bull trap, and this is a bear trap, and we had a rally, and once again, here is the bear trap, and before it there is a tiny bull trap, although at the time it seemed more significant. Now this range 2 days later with the yellow arrow, this actually never happened. This is a data error with stock charts, which they never fixed. They usually fix their data errors. I don't know why they kept it. So that resolved higher again, and another tiny box, and once again we cut the low, and from here we can go up or down. And this does not help in terms of planning our trades. I'm just acknowledging the opportunities for this entire advance, which is terrible technically wise, to correct back to where it started, around 210, or continue up in a similar manner. And I have to say, if you look at early to mid-90s, this is how that bull market progressed. It was endless grind, sideways, a little lower, followed by sharp spurs of bull advance, and again, a whole lot of nothing. So I did not trade through the 90s. I don't have personal experience of that, but it happened on the chart in the recent past. Now, if we talk about recent past, let me show you 3 years, 2.5 years of New York Stock Exchange Composite Index. This is not a manipulated index. This is all the stocks that trade on New York Stock Exchange, and it's still market weight based, but they don't choose. It's whatever trades in there goes into index. So this is a more true picture of the market over the past 2.5-3 years. Ever since 2014, we got stuck in the sideways range. There was a bull trap over here that resolved down, and even more down. I mean, this whole thing from the top in 2015, in early summer, late spring of 2015, to the bottom in the beginning of this year, is a bear market. It's over 20% down. And if you look at many individual stocks and groups, they've fallen even more. I have internal saved. I can prove it. I'll put it out in the next video, that we had a devastating 2-year long bear market. from which this is the first rally. Zochen some kind of a rally. And, this could be the same kind of a bull trap that we had over here. It heads back down. So you need to acknowledge these possibilities. We've been stuck in an endless sideways grind for almost 3 years. And here is what it does. Now look, 2014. Early in the year we had a drop, then we had a little rally, and it's been nothing but a circle jerk ever since. If we look at Cobra's Market View, which is a very popular website and daily notes of an extremely talented analyst. He works primarily with S&P 500, some major indexes and major stocks. Every day there is a live update for the day traders and short-term traders, and even swing trading can be helped tremendously. I'm not getting any money from him. This is not an advertisement. I just want to show that in February of 2014, he had 3,000, 8,000, 5,000 views. He had 5 pages, 7 pages, 8 pages of notes. Fast forward 2 years, right now, 1,600, this is weekend, 1,700, not even, 2,000. 3 pages, 4 pages, 5 pages of notes. You want to know what it used to be? I'll show you what it used to be. Back in 2011, 13,000 views, 10,000 views, 8,000 views. That was probably something before the holidays. A lot of, these are not banks, these are not sovereign wealth funds. These are private investors, speculators, somebody who is interested, some crazy people who looking to get an edge on S&P, some trading, make some money. And from 2011 to 2014, half of them were gone. And from 2014 to 2016, another half of them was gone. That's pretty scary. I don't know exactly what it means, and it does not help you in everyday trading, and it does not tell me what to buy or what to sell. I just look at CSI, stop at 216, we need to acknowledge it, we need to observe what's going to happen next, how it's going to break it, if it's going to break it or not. I mean, the sectors of the S&P 500 is in a pretty bad shape. 5 of them is off, half of them is off. Now, off is not a sell signal. It just means that there is no upward trend. The new trend may develop. In fact, the new trend only can develop after the old trend goes off. It went off. Now we can have a new buy signal. We have -7 on S&P 500. We have -9 on Industrials XLI. All these sectors that are still yellow, they officially in correction. They still may give us a good sell signal, which will be at a higher level, at a higher price level than it is right now. So it's not over and done, but half of them is off. The market is the market will wait for next week, so we can make some kind of a decision here. Thanks for watching.